Just now, the price of Tesla stock rose for the second straight day. Shares of the company rose 1.6%, bringing their two-day gain to about 7%. Tesla has been on a downward trajectory ever since the automaker disclosed lower than expected deliveries for the third quarter of the year, along with the reportedly lackluster Tesla 8. However, after a sharp decline, Tesla's price is now starting to rise as the firm claims it expects improved production value in the coming months. Without a doubt, Tesla is currently among the most valued companies in the world, but just like the rest of the world's big automakers, Tesla has had to contend with lingering supply chain problems, a weak economy, heightened competition, and shrinking order backlogs. All of those have, at one time or another, affected the company's financial results and significantly decreased the value of its stock. Although it doesn't seem like Tesla has any rivals in the EV market, there are questions about the company's ability to weather the storm and whether its stock price will continue to decline in the future. The worst of Tesla really behind them. Let's look into it. But first, if you like this kind of content, remember to like and subscribe to get the most recent information on everything Tesla. Oh, and make sure notifications are turned on. Tesla shares dropped after the market closed as a result of the company lowering the prices of some of its vehicles in China. In China, one of the most significant markets for the firm, they had lost more than 1%. Its Model 3 and Model I automobiles now have much lower sticker prices. A portion of the price increases that the automaker had to undertake earlier this year in China and the U.S. due to rising raw material costs may be partially undone by the recent pricing reductions. Following the price cut, the starting price for the Model 3 sedan was reduced to $36,615, and the starting price for the Model Y was reduced to $39,776. First, based on the decline in Tesla's car prices in China, one may presume that the automaker is experiencing problems with demand. These worries are fueled by the fact that indigenous firms like PIT, which is backed by Warren Buffett, as well as startup NIO and KiwiBank, are posing a greater threat to Tesla. However, blaming the demand problem on an increase in these cars may not be appropriate pricing since rising raw material costs harm these companies. Other electric vehicle producers raised their prices. Similar problems are still present in the Chinese economy, particularly in light of the stringent COVID-19 regulations, which continue to have an effect on retail sales. Therefore, if Tesla has developed to the point of lowering car prices, it should imply a greater control over its finances rather than a demand issue. Undoubtedly, during the current recession, automakers have found it difficult to maintain up with automobile production and sales. Musk had previously cautioned about the pressure that raw materials and logistics are facing due to Tesla's significant inflation in March. The price cuts seem to have come after Musk said he saw indications of a Chinese recession, but at this point, there is no cause for alarm. Tesla actually expects a huge demand for sales in the final 3 months of the year. The automaker plans to significantly increase global production in the fourth quarter of its 3 electrified cars and best-selling Ally. Additionally, new plants in Berlin and Austin boost production for the future year during the night. Elon Musk has stated that if Tesla's production forecast comes true, it will put the company on track to meet his output goals for the following quarter and get it close to BMW's size by the end of the next year. Musk stated that he thinks Tesla has a possibility to one day outperform the value of Saudi Aramco and Apple put together. He also said that he had never thought of this idea previously. Additionally, Tesla is growing output at its gigafactories and its car-making plants in Texas and Berlin are accomplishing incredible feats. Because these crucial elements are not reflected in Tesla's stock price, some research suggests that a share buyback might not be an effective way to raise the company's stock prices. However, it's possible that it could be. Tesla could repurchase up to $10 billion worth of its shares in 2019, according to Musk. Despite saying that Tesla wants to go through the proper channels to carry out a buyback, Musk did confirm that it is entirely possible for it to execute one for between $5 billion and $10 billion. Because of the new stock repurchase tax that has been implemented, Tesla might be doing this a little early than usual. The Inflation Reduction Act of 2022 currently imposes a 1% excise tax on share buybacks. although it is not anticipated that the stock buyback tax will reduce the number of stock repurchase transactions after December 31, 2022. The tax will mostly be perceived as an additional execution expenditure. Due to the fact that it will have to spend more money on share buybacks in the following year, Tesla may execute the repurchase earlier than expected. If Tesla is successful in carrying out the share repurchase this year, it will boost the already promising fourth quarter, leading to a high share price for Tesla and increased returns for its investors. Even though many people fear a recession, Tesla expects future growth to be 50% annually. According to the automaker, deliveries will rise at a rate of roughly 50% compounded annually. Even while many could argue that there is a demand issue, Musk has also reiterated that Tesla would have a terrific fourth quarter of this year. Tesla will likely still make one final push at the end of Q4 based on its September deliveries, which will make up more than 2/3 of the quarter's deliveries. Despite the potential that Musk is making these comments to increase the value of the company's shares, he might just be sincere and optimistic. Let's just say that Tesla expanded too quickly and experienced a third-quarter transportation shortage. Tesla is focusing on the top tier, according to Musk, and the manufacturer will grow at a 50% annual growth rate. He did not, however, say how much he knew about this. It's also crucial to keep in mind that despite Musk's forecast of a 50% increase for the near future, this is probably more of a manufacturing goal than a delivery one. The goal is to prevent a rush at the end of each quarter, therefore Tesla is trying to spread out deliveries. The manufacturer is still posting industry-leading sales and revenue figures, which are usually what determine a company's long-term viability. However, Tesla's fundamentals haven't changed. The selling of 4680 batteries is another sign of success. They gave an update on these new battery cells, and it also appears that dependency on the new cell is decreasing. According to the update, the 4680 battery cells will be essential to Tesla's planned 50% growth rate, providing they can ramp up to full volume manufacturing. If Tesla can continue to grow at a 50% rate, it may be able to produce up to 35 million vehicles by 2030. This also strongly depends on Tesla's forthcoming vehicle, which is most likely going to be a little robotic taxi. Either the Sabbatical or the Roadster, which will eventually be a van like Tesla, will have had a highly unique example of manufacturing techniques that can subsequently be replicated on a larger scale if their FSD is widely embraced. The ambitious goal that Tesla has set is to build 2.1 million cars by 2023. Musk informed investors last quarter that he intended to expand Tesla's production to 40,000 vehicles per week by the end of the year, even if this may seem like an ambitious objective considering that the company still needs to withstand the difficult market conditions. Therefore, it's not totally impossible. A bit under 2.1 million is the result of this multiplication. Tesla will be a bigger automaker than Audi and somewhat smaller than PGM Toy, which last year produced 2.5 million vehicles at a rate of 2.1 million per year. Tesla would demonstrate at least a 35% sequential growth rate in Q4 if production were increased to 500,000 vehicles or more. In the first 3 months of 2023, Tesla intends to produce 1.6 million vehicles, putting it on track to sell more than 2.1 million electric vehicles the following year. Do you think Tesla will succeed in achieving that goal? If you're still here, kindly let us know here along with your best guess. Learn more about what Tesla has been up to recently by watching the video that is displayed on your screen. Good day.